Hello, everyone. Today on Let's Talk Real Estate USA, we have David Barr of Red Oak Mortgage. And before we move forward, remember to hit the like and subscribe button for more weekly content. David and I will be talking about networking and education as the basis of your career, the shifting markets, and different strategies for borrowers. Here we go. Hello, everyone. Welcome to Let's Talk Real Estate USA. And today we have David Barr of Red Oak Mortgage. We're talking mortgages, the shifting market, and networking and constant education as key to a successful career. Hey, David, how's it going?
Good. Good to be with you.
Wonderful. So let's start off with the basics, which is tell us about yourself. Tell us how you got into the mortgage industry.
All right. All right. Well, I got into the mortgage business in the first half of 2020. It was an interesting time for the world with COVID. So it was a terrible time for the world, I guess you could say, but it was a wonderful time to be in the mortgage business or to get started in the mortgage business, considering where rates were. I guess going backwards, I joined the business with about 17 years of prior experience, mostly like in financial advisory services. Early in my career, I was a financial advisor. What I love about that part of my career was building relationships, helping people put a plan together to accomplish their goals. So that always stuck with me at that earlier part of my career. As I evolved, I guess got more into, I was at a big four firm for 7 years. I was more of an analyst role. I was always good with numbers, math, understanding markets, and I guess, didn't feel as strong of a connection to the work that I was doing. And I got to that point, it was kind of at a little bit of a crossroads in my life. And my friend, Brian LaRue, who is the, president and founder of Red Oak Mortgage, I've always respected him. He's just a winner. And it was just a very interesting time in the market. We had a conversation. I just said, I want to be a part of your team. And it's, I'm happy to be, to have been there, ever since. So it's been, I guess, 2.5 years about, and I got into the business at a very interesting time. It was with very low rates. The market has changed quite a bit, and I think that's just the nature of this beast. It's a cyclical business, and there's ups and there's downs. One common thing, though, is, the people that are successful in the business, of course, they're going to have good times and bad times, but they have been through the 2008 crisis and they know how to navigate through it. So this is kind of my first time going through this crazy market. But I'm a historian. I like to learn and just educate myself, and it's something I like to do for all of my clients too, and try to just get them. We don't know where exactly what the future holds, but just understanding certain patterns could help them provide clarity around their decision making.
So we were talking prior, and we've talked many times, but the idea that education and networking is key to not just a successful career, but being a successful person.
Mm-hmm.
So how would you say that, especially, let's start with networking. What is your favorite forms of networking? Mine is I love doing events. I love cold calling. I love just talking to random people. I'll wear a shirt at the gym that says, talk to me about real estate. So what are your favorite approaches to this?
Yeah, it's a great question. And I'll be honest with you, I'm completely aware that networking is so important, and it's a little sometimes outside of my comfort zone. I consider myself more of an introvert, but I do like people. So with that being said, where I've been successful is just building relationships with strategic partners. And when I could demonstrate value, that's really where I've had the most success. So working with other real estate agents, once we prove ourselves, they recognize how, how difficult it could be to close a deal, all the steps that are involved with it. So having these strategic alliances, these relationships to help our clients and also help, our agents close deals. So I think that, helping an agent with an open house, just doing anything to make them look good is where, people in my business, loan officers have really thrive. It's like based on how strong are your relationships and people that deliver. I don't think I'm not as active on social media as I should be. It's a little outside of my comfort zone, but it's something that I think I do have to challenge myself because I'm very aware of the people that do it well. They really get a good return on their time and their investment into that.
Yeah, wonderful. So for me, I love the fact that the networking becomes like your currency. Now, keep this in mind, my first career was a performer. And at that time, everyone told me, you must network. You have to learn how to network. I did many master classes where they just talked about networking. And at that time, you're just like, oh, I don't really need that. I just need to go audition. I just need to kind of show my worth and it'll be fine.
Yeah.
No, and then by the end of my career, I realized every single major opportunity I had ever had was from the people I knew and from what I got from those people. When I sang at Carnegie Hall, it was not because I auditioned. Well, I auditioned, but it was from the people I knew. It wasn't going in for a cold moment and just be like, hey, you don't know me. No, they knew who I was. They knew they could trust me.
Yep. Yep,
So
absolutely.
isn't that a fascinating thing that networking is also the building of trust?
Trust is everything, especially in our business and our reputation. So I really couldn't agree more. And that's fantastic that you sung in Carnegie Hall. I didn't know that.
Thank you. Name drop. Anyways, so back to it. For networking events, what are some of your favorite ones to do, or the ones that you have felt, even if it's just like one you can pinpoint, one that you felt really exemplifies you at your best, and how you then can use that in the future?
So, where I've had success was building a relationship with one agent and then having them get me into an office. So, for example, at your office, Barbara Konecki was so kind, and she was she was a fan of mine, and she was really, an advocate and helped me, get in front of a lot of other agents and present and, at, the monthly meetings. So I think that, and at times it is uncomfortable for me to get up in front of a lot of people, but at the end of the day, whenever I feel like I'm delivering something of value, that makes me feel more comfortable in my own skin, marketing myself, networking, and just feeling like I'm there to benefit and be of service to other people. Of course, I want to grow my business as well, but whenever, and the nice thing is I'm part of a company where I feel they make me look good, and being part of a team where I do, where the service is fantastic and we actually can make a difference in people's business. It's a much easier for me to get up in front of people, talk, and kind of promote who we are, our service, and all the value that we can provide. So, yeah, the open houses as well, helping. It's interesting. When you're with an agent and people are walking through. It's an opportunity to connect with people. But I feel like whenever, that's more direct, going directly to a consumer versus through a referral source. I haven't had as much success going directly to a consumer randomly at an open house. The only times I feel like I've had is when I have just a conversation where I could connect with someone. And whenever that happens, I really have to listen to them, understand what's important to them. And really, I think the networking where leads are going to convert into sales is whenever someone knows that you get them and that you can deliver for them. And just through a conversation, I think that comes across pretty clearly if you talk to someone for 20 minutes and you hear what's important to them, what are they trying to accomplish, and then really just adding some type of tidbit where they could walk away saying, my conversation with Dave kind of shifted how I'm going to approach this process. And that's where I feel like I've had success networking. But it's not by handing out a card. It's all about how much of a connection is there. And just doing an open house with you, I was amazed how you're fantastic at that. Really just talking to people and, just getting a sense of what's important to you. Oh, lower taxes, commute, but just in a couple quick questions, you were so good at getting to the heart of what matters to people. And at that, the open house we had, I don't remember exactly when it was, probably about a month or two ago in Livingston. But I was saying to myself, I probably just eavesdropped you on about 3 or 4 conversations, and I said I'd be surprised if one of those doesn't turn out to lead to something, because it was very clear that you were making a deep connection. I think that's really the secret sauce for a lot of people.
So there's this idea of networking and then the education that follows. Because first you build the trust and then you have to hand them knowledge. So how do you do that from a personal level? How do you educate others? How do you educate yourself over time?
Yeah, I think it's first thing is just trying to understand what someone's trying to accomplish, and getting a sense of what's their current situation and what are they looking to go from there. Are they currently renting? Are they a first-time home buyer? Are they currently buying? Right now, if you own, are you locked in at a mortgage rate of 2.5%? Are you aware that right now where mortgage rates are, how much more expensive it's going to be? What's the motivation for buying? Is it because you want to increase the size of your home? Whatever it is, just trying to get a sense of what is someone trying to accomplish. And by them talking, and just, hopefully they could just talk and talk and talk, and I could listen. And perhaps there's a way that I could kind of, after digesting everything, I think the more I ask them questions, usually it's very helpful, even if I'm not adding any advice. Sometimes just asking people questions, as the wheels turn, all of a sudden they're like, you know what? I'm not selling them anything, but they're just telling me exactly what it is. And some people don't verbalize it, as crazy as that is. They might think things, but they don't really just process everything. So I think just asking the right questions, getting people talking, could provide clarity of what is it that I'm really looking to accomplish, which is really important, because it's easy to there's so many distractions with interest rates and with the market and all these things, but ultimately, what are you looking to accomplish? And I think that could kind of cancel out some of that noise, and could help people kind of get laser focused on, if this is what I want to achieve, doesn't matter that, where the market is, and it may. But I think the key is really just getting people talking and lasering in on what is it they want. And then backing into, at least for my part of the conversation, is the finances. What's a monthly payment you're comfortable with? And right now this is where the market is. At the same time, there's a lot of ways we could structure your payment. You could always lower your monthly payment by paying more upfront. Is that something that you'd be comfortable with, knowing that there's a payback period of whatever timing there is? So there's just a lot of different pieces of the conversation, but I think it flows easier once you get a sense of, as you get really deep, how much cash does someone have? Do they want to keep more cash once they move in for renovations? Are they going to need to put a lot of money into the house? Given all these things, once I hear that, it provides more clarity of how do you best structure a loan to align with someone's objectives. So, just like I was as a financial advisor, as a mortgage professional, I feel like it's really important. Most successful people, if you hear noise back there, it's my daughter's guinea pigs. So just ignore them.
I was wondering what that sound was.
Yeah,
I'm getting that in. There's no reason to cut that. Keep going.
But I feel like the most successful people in this business are the ones who listen, and they provide that value, not just in financial planning, or not just in mortgages, but in financial planning and in, as a real estate agent. I just think that the people that are the best listeners, they know what people want to accomplish, and then basically just advising them, asking the right questions. I think that those are the people that really not only build the strong relationships, but have a better chance of providing value.
Yeah, yeah. There's a wonderful team leader up in Montclair. Um, and the thing I learned from her was keep your mouth shut. Simple as that. Because we want to, there's a difference between educating people, and I used to be an educator. So there's a difference between educating them and listening to what their knowledge is already. Because, like, number one, you don't want to just double up on saying the same thing they already know.
Yeah.
But if you're quiet and let them speak, they will reveal what they truly want.
Mm-hmm.
And they'll reveal their strengths. They'll reveal their pain points. But if you're talking, you're never going to learn.
Yeah.
So you can give them little tidbits, but then shut up and let them go. So number one, can you tell me what points are, and then how are borrowers using them to their advantage?
Yep. So points, basically paying a fee in order to lower your monthly rate. So 1 point would be 1% of the loan amount. So if it's a $500,000 loan, 1 point would be $5,000, and that would be additional closing costs. And ultimately what that might allow someone to do is lower their monthly payment. Let's just say it could lower your mortgage interest rate by 0.5%. I'm making numbers up. It really just depends, whatever the market is.
Can you also explain to me how that works from your end? Like, I get how it works from my end. I pay something that goes down. But for your side, how are you, the company, paying down these also?
Got it. So Red Oak Mortgage, we are a correspondent lender, which means ultimately we will close the loan on our own warehouse line of credit. And then the next week we transfer the servicing to an investor. So when we do that, when we transfer it, we get paid for the loan and we keep the spread. That's basically how it works. So, and you get paid different amounts based, this is just our company. There's different comp structures for each, each loan officer. But when we pay points, that allows us to overcome the spread, if that makes sense. So a lot of people prefer to pay points and lower their mortgage rate, knowing that the payback period might be 4 years. Last year, that was a common conversation, and I would like to always lay it out for different buyers. These are your different options. You could pay points. You could just pay, no additional points, in addition to closing costs. Or in some cases, we do a lender credit. Lender credit's just the opposite, where you take a higher interest rate and you could receive cash back. Right now, we're not finding that. In fact, where the market is, we keep hearing that interest rates keep going higher. And now what we're finding is, depending on the lender that we're working with, even if rates go up, they might be capping at a certain percentage because they're aware that people are probably going to refinance out of that before long. And as a result, people have to pay points. There's no way around it. In order for us to make any money, we have to charge points. So I think that people who are buying right now just need to be prepared that there might be additional points given where the market is. I feel like as my goal is to help people minimize their expenses, because we don't know exactly when the market's going to shift, but we anticipate that mortgage rates will come down once inflation comes down. Is that going to be 6 months, 12 months, 2 years? I don't know, but it's unlikely people getting a mortgage now are probably going to be in that same mortgage, considering like where they are 2 years from now, 3 years from now.
So, isn't it like 5 to 7 years is actually how long the average 30-year mortgage lasts? Because people are always refinancing.
Yeah, I'm not really sure exactly what it is, but we try to just tell people we don't know exactly when. However, given the amount of debt in the system, it's unlikely that I don't see it being sustainable for mortgage rates to be so high. Now, what does that mean? Or not mortgage rates, but really the 10-year Treasury. And 10-year Treasury is really correlated with mortgage rates. That's actually a misconception. I don't want to bounce around too much.
No, let's do it because people really don't understand that when the Fed raises interest rates, it's not directly connected because sometimes they'll go up and the mortgage rates will fluctuate.
Correct. Yeah. So mortgage rates really are tied to inflation, much more. And so people hear the Federal Reserve is increasing rates as they continue to do. As a mortgage professional, I'm actually happy about that because as they do that, they're trying to attack inflation. And once they attack inflation, or once inflation goes down, mortgage rates are to follow. So we really want them to control inflation as much as they can. It's been an interesting ride lately. But bigger picture, the likelihood of, with the Fed having, with the U.S. Treasury having 30 plus trillion of debt on their balance sheet and a lot of it rolling off in the next few years, the debt service of interest, if the 10-year Treasury is still very high and they can't control inflation, there's going to be a ton of political pressure. And this is all my opinion, by the way. But I think there's a ton of political pressure that we need to somehow lower rates, and that could just be the Federal Reserve buying up all these bonds. But I think there's just going to be a lot of pressure to lower rates so all our tax dollars aren't going to pay interest. So I feel like just the likelihood of being in a high interest rate environment for a very long, sustained period of time, I think there will be opportunities for people to refinance, which is why I wouldn't necessarily advise people. We'd have to kind of break it down based on the payback period of paying down points, because if it's going to take 4 years to recoup that cost by basically lowering your payment by $73 a month, if it's going to cost you $5,000, does that make sense? We kind of need to just explore what makes sense. And plus, if let's say someone wants to, they really want as much cash as they possibly can to furnish their house, whatever it is, how can we minimize their out-of-pocket costs?
Yeah.
How can we keep as much money in their pocket as possible? So that's always something that matters in how we structure the loan.
So that's actually delving into the second question, which is strategies that you're using for the borrower. You've already covered you can buy down points, that sometimes you hold back on certain things in order to have more cash. So my question is, what are some other strategies that you've used to help them? Either through hypotheticals or through like actual things you've done to help out the borrower.
There's a couple different scenarios, and it so much depends on the individual and also the time. A year ago, I had a buyer, and they were dead set. I gave them multiple options. Like I said, points. They bought 3 points. So I think it was about a $300,000 loan. They paid $9,000 in points to lower their mortgage rate. And I think ultimately their rate was in the low twos, might have been for a 30-year fix, 2.25, because they said, we're going to live here forever. And we don't, their opinion was rates are not going to ever be this low again. So even though it might take us 7 years to break even, we're very happy paying an obscene amount, which was the highest, I think that's like the cap. You can't go pay more than that amount. And ultimately, I think they are thrilled today with where rates have gone. But I think that's a strategy that made a lot of sense for them because they're going to live there for a long time. If someone, if you're buying a house and it's your primary residence, I would not, it's not you should plan to live there for more than 5 to 7 years. It's a long-term investment. It's not always the case, but I feel like because it is a long-term thing, if people anticipate that there won't be opportunities to refinance, that's where points make sense. Right now, we're not in that place, but given the way loans are being structured, there's really no way around it. People have to pay points. So when people come to me, my job is to say, how do we minimize your points? Minimize the fees. It's so easy to get wrapped up in rate. It's not just about rate. It's all about the total cost of it. I could lower people's rate by charging 3 points every time. That's not going to necessarily be in their best interest, especially now. So I think that people really need to look into the terms, not just what's the rate. And without getting the full picture, a lot of buyers could be misled. So especially with FHA loans, there's a lot of fees that go along with like the upfront mortgage insurance and everything. So people get excited if they hear a lower rate, but it's really important to get clarity on what's your total payment. And that's just, and the total payment, so far we've only been talking about the mortgage, bless you, with principal and interest. But I think a lot of buyers, it's funny, they come to me and they say, I want to get pre-approved, or they say they're pre-approved for a certain amount. It's always important to also know it's not just 500,000. We need to know what's the taxes, what's the total, what's your total monthly payment. I'm not pre-approving you just for an amount. It needs to be for a particular property.
We went through a period of time with very, very, very historically low rates. Like my condo, 2.75%. So here's the question. Once rates have now started increasing, what are some strategies that you're using with your clients? Because right now it's staying in the sixes. I think it's going up to at least the sevens, maybe the eights before. Because right now they have inflation peaking, but the goal isn't to keep it steady, it's to bring it back down. So anyone who's like, oh, hopefully they'll bring the rates back down right now. No, they're going to ratchet it up. They need to bring it down, not even it out. So my question is, how are you dealing with the rate increases? How are you helping the clients overcome this?
Yeah, that's a good question. I think the first thing is we just don't know in the short term. I didn't think rates were going to get this high. I wouldn't be surprised if they're peaking now. But at the end of the day, I just don't know. I think that, I didn't think that they were going to get this high because I thought inflation would come down a little bit by now. It hasn't been the case. So if we get more inflation readings, where it's still elevated in the eights despite increasing rates, then, this could keep going on. Like it's tough to tell, but I think that no one's going to know for sure. So I think that people just need to be prepared that from day to day, from week to week, you just don't know where it's going to be. But we are in a rising interest rate environment. So I think, just mentally people need to be prepared for volatility. And right now, you could say this is what your monthly payment would be for a purchase of X amount. And then ultimately, it's what's a monthly payment that you're comfortable with. If this is going to really stretch you too thin, because there's really two different conversations. What are you pre-approved for based on your income and your assets? And, quite often a lot of people can get pre-approved for an amount much larger, than they would ever want to take on. So it's really two different conversations. First, are you pre-approved for X amount? But then what are you comfortable with? If you can't afford your lifestyle, unfortunately, people, that's what's happening in this environment. Things are a lot less affordable now for people than previously.
All right, can we delve then into a thing that I see coming back? I haven't yet encountered it, but I hear it's happening, which is the adjustable rate mortgage.
Yep. So adjustable rate mortgages, it's funny, a lot of people hear adjustable rate mortgage. What's the first thing that comes to your mind when you hear that?
In my mind, I go bad.
Best. That's what a lot of people think, because of the the crisis from 2008, and that's because a lot of people were in these loans that they just weren't qualified. Their income, their assets, it was just different underwriting standards then, and then there was a systemic failure with adjustable rate mortgages. When mortgage rates went up, people couldn't afford them. At the end of the day, adjustable rate mortgages, depending on the length of, they call them ARMs, but if you have a 7-year ARM, for example, that means that the rate that we lock you in at when you're, at closing, prior to close, is the rate that you're going to have for the first, it's fixed for 7 years. And then after 7 years, assuming you don't, still are in the loan, you don't refinance, then basically it's adjustable. And depending on the specific terms of each individual loan, it could go, if rates are much higher at that point, then it'll adjust higher. If they were lower, and if they could go lower. And most people, if they do that, they probably would have refinanced before then, which is why right now ARMs for high balance loans, so really anything above, I don't know the exact amount because they keep changing it, but for any loan above $700,000, and the amount keeps changing, so I don't know the exact amount, is a great opportunity to get an ARM. Below it, can't really, there's no market for them. But if someone's looking for a mortgage that's, let's just call it above 700,000, it's, it depends on the day, it depends on the company, the market keeps shifting. But recently when I was pricing it around, I felt like rates on ARMs might have been 75, I'm sorry, about 0.3% lower. So if someone could get a rate of 5.5 versus 5.875 over the course of 7 years on a loan, a large high balance loan, that's a lot of money. So while there is some risk, the likelihood of someone being in that same loan 7 years from now without, if you're working with a professional who is basically monitoring the market and telling you now might be a good time to refinance, I think it is a really good strategy that we're encouraging people, for those, some people, if they just don't feel comfortable with that risk, I just want to lay out the facts. This is going to save you X amount over the course of 7 years if you're still in the loan then. Are you comfortable moving forward with this option versus the alternative, which basically you have more stability in case somehow we're in a high interest rate for over 7 years. And at that point, even if we are, the opportunity cost of those savings, it's a pretty compelling environment. It seems like the right option for most people, but I like to lay out everything for them because there is still some risk, but it's a much different environment than we had in 15 years ago, where it got a kind of a negative connotation just given all the fallout from it. So it's a conversation I'm having with people all the time, and usually at the start of the conversation people are not really open to it, and by the end of it most people feel like that's an option that they want to proceed with.
Oh, bringing this to a close, what are like your go-to book or podcasts or things like that to listen to or read?
Yeah, I got into the podcast the last few years. Just for general knowledge, I like the New York Times daily podcast. But besides that, I listen to I'm a Bitcoin guy. So, and it's funny, it's when you learn about Bitcoin, you have to know about the entire market. So I feel like I learn a lot about like the macro economy and everything going on in the world. And so Anthony Pompliano is one of my favorite influencers. So it's the Pom podcast. I'd highly recommend listen to him. What else? I love, what's the name of it? The Investors Podcast with Preston Pish. So those are two great influencers when it comes to learning about Bitcoin. So if anyone wants to learn about Bitcoin, please contact me because I just will talk about it all day long. But I think it's fascinating. But you can reach out to me I'm on Instagram. My handle is at David Mortgage Barr, or you could always email me at david@redoakmortgage.com.
Wonderful. So thank you, David, for coming on today. We covered a lot of stuff. Loving it.
All right, this is great. Good to be with you. Thanks for having me.
Talk to you again soon.
All right, bye-bye.